Hey everyone, I am Charting Man Dan of the Chart Guys. I've been a full-time trader for 13 years, and in this video we're going to use charts and technical analysis to help us determine the most likely scenario over the next couple of weeks. The NASDAQ is the tightest it's been in years, and we're expecting volume and volatility, and depending on which direction we break, it's going to dictate what I'm looking for trading opportunities. Let's look at the charts.
All right, so we'll start with the NASDAQ because of how tight it is, and this is going to dictate a lot about the broader market in the short term. This is the futures chart, NAS 100 USD, and over the last 12 days, we have a range of less than 3%. And again, if you scroll back and try and find a series of 12 days where we've been this tight, you're looking back years and years. So again, we know volatility is coming. We have earnings in the tech sector next week, and then the big names next week and the week after. But I think we're going to break before that. Today was a daily inside bar. And we're either going to see a bull break to the highest level in 8 months and testing the highest level in a year, or we're going to get a bear break into weekly consolidation. And the bulls are comfortable in the sense that even with a bear break, we're going to be watching for weekly higher lows unless earnings are a disaster, across multiple sectors. So personally, I'm going to go over the clarity of trading today towards the end of this video, just because, well, we'll do it now. So the amount of times where I have a lack of clarity in the morning and then just am in the zone late morning and the second half of the day, it's very consistent. And this morning, the 2-minute time frame, the volatility was all over the place. High of the day, low of the day, big bounce but no trend change, low of the day, big bounce, no trend change, low of the day. So I was able to say I can't trust the bulls because we're not changing any trends to the upside with higher lows and higher highs. But as far as clarity, I didn't have a ton of confidence in clarity in short-term direction. Then it started to present itself. So I was looking at this as a falling wedge, knowing that we were testing the low of Friday and saying, all right, well, if we're going to hold the low of Friday, bulls must confirm this falling wedge with a break, which we get. So, all right, from there, I know that I'm watching the 15-minute time frame. And I say, all right, 15-minute bounce, we have to confirm a 15-minute uptrend if the hourly bounce is going to get any follow through. Zoomed in, 2-minute rising wedge. This was a nice trade where we knew 15-minute consolidation was going to be due here. And so we're watching the 2-minute rising wedge for 15-minute consolidation. Clear bear break. And again, this is all in hindsight at this point, but this is all stuff I'm talking about during the trading day. Getting your proof right now. QQQ, 2-minute rising wedge watch, looking for 15-minute consolidation and then a 15-minute higher low. So that's at 142, which is right here. There's your bear break into 15-minute consolidation. And then from there, we get the 15-minute higher low. And then there's your bull break. And the bulls control the day into the end of the day. So the main takeaway for me is know yourself. I am such a better trader after the first hour of trading in the day. There are plenty of times where I have a good morning in the first half hour, when I'm top fishing a really aggressive name, where I'm buying an oversold bounce for a gap down open. But the majority of the time, if we're talking day-to-day basis, day in and day out, it is 10:30 and beyond where I get just in the zone clarity and my win rate is much higher. So maybe that's you. You need to figure that out for yourself. So QQQ is a tightening hourly range. I'm just watching Friday and into today. High of Friday, low of Friday, lower high this morning, higher low this afternoon. So potentially we just set another lower high and keep tightening up. We'll have to see how we open tomorrow. But we are closer to resistance than we are to support. The bears would have to break 312.57 for a clear bear break. That's over $6 away. And the bulls need less than $3 for a clear bull break. And as I keep saying, I am bullish as long as we keep forming higher lows. The S&P 500, just looking at SPY, just had the highest close that we've had in a very long time. And we're looking at, if this bull break takes place at 415.09, it's just 416.72. And if we get over that level, we're then at the highest level that we've seen in over 7 months. So I understand why people are looking bearish. I know that there's forget all the fundamentals. Sure, that's the reason a lot of people are looking bearish, but even just technically. Financial sector looking for a weekly lower high. Healthcare sector due for weekly consolidation. But I'm just not going to be bearish if we're setting higher lows. I'm just keeping it as simple as you can possibly keep it. 405.68, higher low at 407.44. If 407.44 is holding on SPY, it's a higher low. I'm seeing rotation constantly in this market over the last month. When we're pulling back in tech, we're going up in healthcare. When we're pulling back in tech, we're going up in the financial sector. And so I'm just keeping it as simple as possible. I am ready for bears. I will go bearish when we lose the daily higher lows. If we are not losing the daily higher lows, I'm anticipating that we're going to break bull. And as I talked about in the weekend video, if you're following us on Instagram and Twitter, I was talking about, I've seen this the vast majority of my trading career. And yes, this year is definitely different than the last decade, the last 13 years. But the amount of times I've seen the slow grind up bull mode in the broader market tells me absolutely respect that slow grind up bull move. And right now we are in a slow grind up bull move that can end at any time, but when it ends, we'll lose the daily higher lows. And again, it's just my style of reacting versus trying to predict. I'm not trying to predict the top. I will react to the top of this move over the last month when it is set. Maybe I won't nail the top. Maybe I'll leave a little profit on the table. But in terms of having the probabilities in my favor, much more favorable to wait for a reason to be looking bearish. SMH, another bear break with zero follow through. So broke daily. We're in a daily downtrend. The weekly consolidation at this point is very healthy. And NVDA, so I increased my short position size last Wednesday at 270, and I stopped out of that increased position size this morning when we had a double top in the 268s. When that broke from Thursday and Friday, I exited. So that's essentially me going, all right, I'm going to go a bit more aggressive because we got relative weakness in NVDA. And then as soon as we break resistance on the hourly, all right, I'm back to my smaller position size, which is comfortably in profit from last week. And I'm not confident as a bear in NVDA. I can't have confidence if we're still setting higher lows in the broader market. So we close at the high of the day, and it's a potential weekly bull flag. So I'm in a small short for NVDA at this point, and that is my only bear exposure right now. So I'm going to leave it just because my break even is over 280. But keeping an eye on it, because if we could set a daily lower high and continue this downtrend, but enough today for me to exit aggressive bear. Tesla, a lot of volatility today, but not much to say about Tesla just because earnings are tomorrow and earnings are Wednesday. Netflix is tomorrow. And earnings are going to dictate whether we head down to 163.91 weekly support or 207.79 weekly resistance. And we know the earnings are a coin flip. And if you think you got an edge on the fundamental earnings, unless you're putting in dozens and dozens and dozens of hours, you're kidding yourself. But that's a reckoning that you have to have with yourself in the mirror someday. Anyways, we'll see which direction we break. Healthcare, potential daily bull flag. So some weakness today, but overall, if daily EMA 12 is support, healthcare bulls are in complete control. Still in the J&J long swing from, forget where that entry was right here. Sold enough so I'm risk-free, stop under 150, and I'm holding through earnings, and I can't tell you how uncomfortable I feel. Just because it goes against all of my rules. And it's because I'm trying to change the kind of trader I am to be more open to longer term holds. And that's why I sold, profit on the way up. So my break even is under 150. So we would need a 10% drop for me to even get to break even. But just knowing that, my account tomorrow is going to swing notably with me having no control over it. Well, not notably, but it's going to swing tomorrow without me having any control over it. And as a day trader, I feel like something's wrong. And that's the kind of thing that we want to ingrain in ourselves as traders with stop losses. Because essentially, I don't have a nearby stop loss where if we have a terrible earnings reaction, I'm going to lose a couple day maker in my IRA account. And so we want to ensure that, we ingrained the habit, that live stream that I did about habits and routine. We want to ingrain the habit of having a stop loss so that when we don't, and I do, but not nearby, that we just feel like something's wrong. And so that's where I stand with J&J earnings tomorrow. So we'll see what we get. But when I make it's part, I'm sticking to the trade game plan, which is all I can do. Financial sector bull break over the high of last week, and this set the tone for the morning. We had weakness, we double bottomed at the low of Friday, and then that was it. Bulls took over from there and did not lose the 15-minute higher lows at any point for the rest of the day. And the next resistance level is 33.55, and we're still going through financial sector earnings, but it's our clear lead bull major sector the last couple of days. And so again, it's just rotation where we've seen money going into the financial sector the last few weeks. I mean, so NASDAQ is sideways for 12 days, we'll call it. So what has XLF been doing over the last 12 days? That's right here. So that is rotation. We're seeing some big tech profit taking, otherwise just sideways, and our weaker sector, the financial sector, changed the daily trend of the bulls. We were talking about that, the importance of that last week. Burden on bears. IWM is trying to confirm the daily uptrend. And again, one thing that I'm watching for is, can we see growth names act as laggards? The biotech sector is doing a great job of that. 5% day on Thursday, a lot of profit taking Friday, but an inside bar bull break and another 4% day today. So this is exactly what a laggard is. This is a weak bounce while the rest of the market's looking great, the tech sector is looking great, and now as the tech sector starts going sideways, we're seeing the biotech sector have its most bullish 3-day run in 2 months. And so we're seeing laggard action out of the biotech sector. And so I'm watching for that in other growth names. I'm watching for that in ARKK, which is extremely tight and is going to see volatility in the near term. It has 3 weekly inside bars in a row. Can't get much tighter. NIO is trying to confirm a weekly uptrend as a potential growth laggard. So if IWM confirms a daily uptrend by breaking 179.78, that's going to be another point in favor of, yeah, keep an eye on growth names to be laggard bulls. As long as SPY keeps grinding up these higher lows, we're looking for laggard bulls. The dollar, anything under 102.81 is a daily lower high. We've got a very clear daily downtrend as our guide, but we're well aware that we are at a double bottom right now with the lowest price that we've seen, the lowest level that we've seen in many months. And so if the bulls are able to pull off an inverse head and shoulders, confirm a daily uptrend off that double bottom, it'll be very notable to us. But for now, anything under 102.81 is a daily lower high. And if SPY and QQQ want to break this range bullish, they want to see the dollar set a daily lower high within the next day or two. With this dollar bounce, gold is double bottomed at daily support, but definitely the weakest we've been in the last month just because we've been very strong. I'm watching for a potential 12-hour head and shoulders, or even if we do bounce from here, we'll be watching for something like that. Potentially shaping up weekly consolidation. I will be interested in scouting weekly higher low swing trade entries in gold and silver. Silver is still holding the daily uptrend and daily EMA 12. Gold is a little bit weaker. The miners are still holding daily EMA 12 and the daily uptrend. So it's just a question tomorrow of, is the dollar going to set the daily lower high right now or not? Oil daily consolidation underway. Anything above 79.37 is a higher low. But keeping an eye out for weekly consolidation because we just went 25% plus off the lows with no weekly uptrend. So we know we have to confirm a weekly trend change for longer term follow through. Natural gas bulls, the most bullish 2 days we've seen since we topped out 6 weeks ago. And it's again the bear breaks that keep lacking follow through, showing bear exhaustion. We have this megaphone pattern. And I'd actually have it right here. We'll see where this candle closes, but trying to break resistance. We're going to look for a 4-hour higher low next consolidation. We'll have to set up a daily trend change. But again, it's very notable bear exhaustion where you have a new low into a 2-day bounce, new low into a 2-day bounce. And so now the question is, how much bounce follow through on the weekly time frame can the bulls put together here? Can we confirm the first daily uptrend? When's the last time natural gas had a daily higher low and a higher high? It has not happened since November. So it's been 5 months without a daily uptrend. So when we top out from here, aggressive swing trading bulls that aren't already in are going to be entering on daily consolidation and putting a stop under the current low. And that is what we're looking at as we head into tomorrow. All right. Appreciate you watching. Hope you had a great weekend. Check out the weekend video we put out about Jungle Funk Joey introducing himself in terms of giving his story and background. That's on our YouTube channel. And do good things. Appreciate you watching. Thanks for the likes and the shares and all that stuff. We need your help for the YouTube algos.
I get this much asparagus every couple days. I don't think I've ever eaten this much asparagus in my life. There's a lot less duck activity this year. Usually this time, last couple years, there'd be 2 males, 2 females, battling it out a bit for which pond they want to be in. Not this year. It's kind of like you have pets, but you don't have to take care of them.